Hello everyone, I'm Shivang Mehta. In this session, we are going to analyze Nakoda Group of Industries Limited right issue companies in FMCG industry, and it is going to be next multi-bagger of our country. So let's do a technical analysis of this right issue. Before we get started, please subscribe your shop channel for analysis of new bonds, NFO, NCD, IPO, ETF, and many more. Also visit yourshop.com and use coupon code Yo100 for flat rupees 100 discount on all products and free 1 year GST and ITR e-filing services. Thank you. Let's get started. A right issue is an invitation to existing shareholders to, first of all, let's understand what is right issue. So a right issue is an invitation to existing shareholders to purchase additional new shares in the company. This type of issue gives existing shareholders securities called rights. With the rights, the shareholder can purchase new shares at a discount to a market price at a stated future value. The company is giving shareholders a chance to increase their exposure to the company at a discount price. So coming to know about the company, so Nakada Group of Industries is a manufacturer of tutti frutti and canned dehydrated fruit cubes. The company also manufacture Kanoda cherries, Indian cherries, sweet lime peels, orange cut peels, sesame seeds, all varieties of jam, sauces, spices, chickpeas, pickles, papads, canned vegetables, and frozen fruits and vegetables. Nakoda Group is also engaged in processing of dry fruits and nuts, which are imported from California and other Middle East countries by trades in Maharashtra. The company has three existing units in Nagpur, Navkar processors, Nakoda Food Products Private Limited, Narsha Food International, and each unit has production capacity of 8 to 10 metric ton. So as you can make out, company is in completely in FMCG industry, and most of its products are seasonal or seasonal oriented. Coming to the financials of the company, so fundamentals of the company looks quite weak in last 2 years. If we see, company has shown some improvement in FY 2021 with around around company has around 4% margin in FY 2021, and company has shown a resistance of being existing in FY 2020, which was very difficult due to health crisis in the country. Right issue details. So issue will open on April 18, closes on May 2. So security name is Nakoda Group of Industries Limited. Issue size is 0.28 crore. So it is a small scale issue. Issue shares is 28 lakh and issue size is 33 crores. Issue price will be 120 per share and face value is rupees 10. Minimum lot size 1 per share, market lot 1 per share, listing at BSE NSE. Terms of payment, investor will have to pay in full amount of rupees 120 on the application. Entitlement, one rights equity shares for every four fully paid up equity shares held on the record date. So 1 is to 4, 4 is to 1, 1 is to 4 is the entitlement ratio. Objective of the right issue, so repayment or prepayment of all portion of certain outstanding borrowings and to augment the existing and incremental working capital requirements and generate general corporate purposes are few of the objectives of the company. Currently stock price is 233, so this right issue is at a great discount, and in future, if on the listing date of this right issue, a great fall in the stock price is expected due to increasing liquidity of stocks in the system. Company has given around 300% return since its inception, and company has shown has moved ahead from December 2021, where stock price was 100 to around Feb 2022. Stock price moved to 300. So in 1 year or 14 months, company has given around 3x returns for the shareholders and created lots of value for small scale small cap investors. Cons of investing. So if the cons of investing in this right issue, so if the shareholder doesn't subscribe to the right issue, then the company may fail to achieve its target. So looks like the company will fail because of lack of fundamentals and rising input cost in FMCG industry. The promoters can raise more money from FP or sector than from the rights, as they can raise rights only in proportion to the existing equity value. Thirdly, if a strong balance sheet company is going for the right issue, then it goes on to create a negative market sentiment for the particular company. It is assumed that the company is struggling to run its business operations smoothly. Coming to the pros, so right issue is a fast source of raising funds compared to any further issue where a lot of regulatory issues, regulatory processes needed with the SEBI. The board of directors cannot misuse share issue option. The board cannot misuse the opportunity of issuing new share at a lower price. The right issue shares offered proportionately to the existing shareholders according to their existing holdings. Directors do not have any much control over the right issue. Right issue incurs low cost compared to any FPO or any other way of raising funds. The right issue provides an option for shareholders to maintain same ownership and raise funds without a form of debt. So if company does not want to raise its financial leverage, then company can go for the right issue. Conclusion, so company is highly competitive and a fragmented segment with many local and multinational players. It has posted an average financial performance so far. So based on its financial track record, this right issue is aggressively priced. Cash surplus investors may consider the parking of funds from a long-term perspective due to rising input costs in FMCG industries, due to geopolitical tensions and rising fuel prices and supply chain constraints. FMCG industry is going to struggle for next few quarters. So now you should consider your long-term wealth creation vision and your risk appetite before investing in this right issue. Thank you.